The bank manager will summon you due to unusual activity detected in your account. How did such a large sum appear so suddenly? See that tea stall over there? Yes, yes. Answer the call. This is the moment. So much is occurring, but where is it all taking place? There's a hidden realm of the internet called the dark web. For transactions above certain limits, proper account transfers are mandatory. You can't transfer more than 50,000 Indian rupees. Violation means imprisonment. Their identity remains a mystery. Gender, nationality, existence, nothing is known. Beyond a name, their presence is untraceable. Their principle, absolute anonymity. Let's be clear about one thing. Crypto isn't money, it's currency. What does this mean? It's currency, which means it lacks inherent security. Cryptocurrency doesn't have the safeguards traditional currencies possess. Why do currencies fail? Like Sri Lanka's rupee collapse, no currency is eternally secure. There's a diverse range: Facebook's Libra, Venezuela's Petro, Satoshi Nakamoto's Bitcoin. Thousands exist, with Bitcoin being the most prominent. Bitcoin's fame extends beyond being just another cryptocurrency. A direct transfer of 1 Indian rupee lakh isn't possible. Bank deposits are necessary. When we inform our bank about that 1 Indian rupee lakh, they track it. Though it's our money, who monitors it closely? Income tax, being connected to banks, must be notified of transactions exceeding 10 Indian rupees minus 20 lakhs. Notifications are automatic. With large money transfers, our currency remains centrally controlled and monitored. For receiving 50 Indian rupees lakhs from overseas, what's the essential code for Indian transactions? IFSC code. International transfers require SWIFT, and for receiving 50 Indian rupees lakhs from America, the sender's SWIFT code first holds it before transferring to our Indian account. Sudden deposits of 5 million Indian rupees trigger account freezing. Freezing doesn't mean closure, but transactions become restricted. Your frozen account prompts official inquiry. The manager calls about suspicious activity in your account. How did such funds appear suddenly? Respond confidently. What's the issue? This system helps prevent illegal activities. But some can transfer money directly between America and India untraceable by banks. What happens then? It becomes cryptocurrency? Cryptocurrency isn't new. The century-old Hawala market operated similarly. How does it work? Say we need to send 10 Indian rupees lakhs from Patna to Delhi. Hawala agents collect cash in Patna, taking their commission. They contact associates, confirming receipt and arranging delivery. Their contact in Delhi handles distribution. These agents settle accounts later, coordinating delivery in Delhi. The recipient gets instructions. Go to Anand Vihar station, contact this number, collect behind the bus stand. No SWIFT codes, no IFSC codes needed. Agents balance their books through multiple transactions. This system? Hundi, that's what we call it. Banks remain operational. A network of agents manages everything. Police payments, operational costs, all predetermined. This business requires specific knowledge. Feels unethical, right? You're saying it's wrong. Suspicious activities leave digital traces. Listen carefully. Understanding taxation is crucial. 30% TDS applies immediately. Additional 10% now, 20% later. Income tax monitors both ends. Understand? Sender pays 10%, receiver pays 10%. For TDS, you provide PAN and Aadhaar cards. Identity verification is mandatory. With 1 lakh transfers, 10% goes to income tax initially. Another 10% deduction follows at receipt. From 1 lakh sent, 70,000 reaches the destination. Government collects 30,000. Hawala markets charge similarly. 30,000 fee for delivering 1 lakh. Physical transfers take time, risk detection, require trust. Agents could disappear with funds. Banks offer security. They can't vanish. Police involvement becomes necessary if agents abscond. This system disrupts economic stability. Agent reliability remains problematic. Understand? Bitcoin digitized this concept. Who moved it online? Government oversight includes income tax, RBI, banking regulations. Bitcoin's value fluctuates, previously $48,000, now $90,000. Dollar rates vary, currently around 84 rupees. Bitcoin operates independently of banks and RBI. Transfers occur directly between users, invisible to banks. Mistaken transfers are irreversible. Like physical Hawala transactions, confirmation methods evolved from torn notes to digital verification. Modern transactions rely on direct communication. Bitcoin enables international transfers without SWIFT codes. Government oversight is limited to purchase points. When buying Bitcoin worth 10 lakhs, the transaction is traceable through traditional banking channels. Like real estate, Bitcoin's value changes. A 10% lakh investment might become 20 lakhs, requiring 30% tax on gains. For 20 lakh payments, total cost including tax reaches 26 lakhs. Direct transfers without tax constitute black money. Bitcoin transfers bypass traditional banking systems. Criminals exploit this for ransom demands. Bitcoin addresses function like Paytm QR codes, enabling anonymous transactions. Hacked YouTube channels often face Bitcoin ransom demands. Bitcoin's decentralization is both its strength and weakness, perfect for criminal activities. Global mining computers verify transactions worldwide. Unlike bank transfers, Bitcoin movements are recorded across all mining nodes globally. While theft-proof due to distributed verification, lost passwords mean lost funds forever. Early Bitcoin was affordable, now it's worth crores. Cash conversion requires bank involvement. Bitcoin suits large transactions, not daily purchases. Global transaction visibility doesn't compromise anonymity. Only transfer codes are visible, not participant details. Similar to Swiss bank accounts, codes protect identity. Remember the Lotus account controversy during VP Singh's campaign against Rajiv Gandhi? Government adaptation led to cryptocurrency taxation. Indian rupee remains legal tender. Cryptocurrency acceptance is optional. Mining requires technical expertise. Large purchases attract scrutiny. Smaller distributed purchases maintain privacy. Countries like Russia utilize Bitcoin to circumvent sanctions. Dark web facilitates anonymous transactions. Incognito browsing offers limited privacy protection. Cryptocurrency represents a paradigm shift in financial transactions, challenging traditional banking while creating new regulatory challenges. Its future remains uncertain, balancing innovation with control.